Hello. I don't think anyone could deny that these are strange and challenging times indeed. So much so that I can't work from my normal studio. So, for the next few videos, I hope you'll forgive me not appearing all the way through. That may be a bonus, as much as a drawback, but you'll get my audio and you'll get my normal slides, plus a contact point where you can raise any questions. I hope you still enjoy the videos, and once we're through this crisis, I look forward to rejoining you from the usual spot. Welcome to this Killick Explains. This time I want to take on another topical term that's being bandied around by the media and economists an awful lot, the idea of a debt jubilee to try and solve, inverted commas, some of the problems being created by the coronavirus and its economic fallout. So the background to this would be what? Well, essentially, as everybody's well aware, COVID-19 coronavirus has wreaked havoc on the global economy. It's destroyed supply, it's put businesses on hold, and demand from consumers has plummeted. So on both sides of the equation, demand and supply, big problems globally. And it's left some countries, businesses and individuals highly indebted. Now you might say, well, they're already highly indebted. The fact is it's left them in a position where they're basically being strangled by the debts they carry. One solution being discussed is a debt jubilee. So what is this thing and what are the pros and cons? Well, who would be the target, first of all? Now, this is a matter of debate amongst central banks, economists and so on. There are various targets for this. You could target entire countries, especially developed and emerging markets, which are heavily indebted and potentially in danger of not being able to meet their external obligations to their creditors. There are businesses, and we all probably know examples of businesses that are struggling at the moment with debt hanging over them. And of course individuals in the form of mortgage loans, personal loans and so on. So the level at which this debt jubilee is undertaken is under debate. Is it at the sort of macro country level, or could it actually happen within developed economies, for example, targeting businesses and individuals? I don't have an answer for that at the moment, but wait and see, watch that space. So what's the concept? What is a debt jubilee? Well, in essence, existing loans are effectively cancelled or written off in the parlance. The impact would be to take away interest and capital repayments from the borrower. So immediate financial relief in that form, and that would create, goes the logic, a financial fresh start for the country, businesses or individuals targeted with this debt jubilee relief. Now, a simple example, if you like, let's take a homeowner with a large mortgage they can no longer afford, and the affordability issue isn't a function of interest rates, which are very, very low potentially, but it could easily be a function of losing a job, being self-employed, not being necessarily covered by furloughing, or the cash flows not happening soon enough for you. Now, a bank could take the hardline view, seize the property on the basis that if the debt isn't being repaid, it's secured on a property, the bank seizes the property. But then so what? The bank has got an asset sitting on its books, not generating any income. So there's an argument that says an alternative is to leave the homeowner in the property and write off the debt. The bank effectively puts the loan to zero. Now, the mechanism for this would be what? Now, it depends which level of debt jubilee you're talking about as the exact mechanism. But in essence, if you're talking about one country helping another, then one sovereign state issues currency, quantitative easing, printing to pay off the debt, buy the bonds, if you like, of another, and then simply cancels them, simply writes them off. Or the government could, if you're looking internally, buy the debt, the bonds of a lender or firms and cancel them using printed money in the hope that those lenders, commercial banks for example, will then be in a position to write off loans to businesses and consumers. Now, what would be the benefits of this? Why are people saying this could be the way forward? Well, the answer is there are several answers. First of all, there is an argument that says there is no point in being owed money you won't be paid. If you have people that owe you money and they're simply not able to meet interest and capital payments, what's the point? In economic terms, who's winning? It would allow the recipient to focus on wealth creation, goes the argument, and spending rather than interest payments and saving. So, for example, if you offer a debt jubilee to an emerging market, the argument goes the government locally will then not concentrate on saving money, which it needs to pay back debts. It will spend money, invest in infrastructure, get the economy moving. And also as a solution, it's something most people understand. Crikey, what you mean my debts could be erased to zero, if you like, is something people understand better perhaps than quantitative easing and so on. And it might be quite socially cohesive, because there's no doubt about it, coronavirus is exposing the gap between the haves and the have-nots, and this, fans say, could close that gap. What about problems then? Well, there are several problems with this whole idea. First of all, there's choosing the right recipients and loans. There's the moral hazard risk. If you simply write off debt for the wrong recipients, surely you create moral hazard. You create the potential that they'll become even greater risk takers later, thinking, well, this is great, I can borrow up to my eyeballs and never have to repay it. It could make future borrowing harder and more expensive for recipients, is another criticism. And it's an expensive solution that could erode trust in public institutions and banks. Now, the expense of it, well, some people are saying, crikey, if the US is prepared to spend $4.5 trillion on quantitative easing, surely there's money available for something like a debt jubilee, but nonetheless there is a cost associated. So, there you have it, a potential solution, fans say, to the world's indebtedness problem at a time of economic hardship. If you'd like to find out more, tim.bennett@killick.com, and to watch videos on bonds and debt in general, killick.com/learn.